You are all waiting for news from Iran, but the real financial nuclear bomb just detonated in Japan. The Bank of Japan broke a 25-year record, and this event is guaranteed to crush the crypto market. While Bitcoin tries to hold at 67,000, smart money understands the hidden tap of global liquidity is closing forever. Daily market review, Sunday, April 5th. Let's look at the facts. The yield on 10-year Japanese government bonds skyrocketed to the highest level since 1999. Foreigners penning down Japanese stocks at a record pace, the worst outflow since the 2008 crisis. Why does this kill crypto? For decades, Japan was the sponsor of the global casino. Traders took cheap loans in yen at 0% and bought risk assets worldwide. This is called the carry trade. But now, Japan imports expensive oil through the blocked Strait of Hormuz. Their inflation has flared up. The Bank of Japan will have to raise rates. As soon as the rate grows, the carry trade mechanism breaks. Investors are forced to massively sell Bitcoin and stocks to repay debts. History shows every rate hike in Japan crashed Bitcoin by 20 or 35% in a matter of weeks. If you want to understand how global money works instead of just looking at charts, support the video with a like. Let's go to macroeconomics. Inflation is returning to finish off the markets. The global FAO food price index is growing again. Fertilizer prices have already skyrocketed to space due to the blockade in the Middle East. Famine and a food shock are now a mathematical certainty. In the US, manufacturing inflation exploded. Prices are growing at a record pace for the last 10 years. The Fed is cornered. There will be no rate cuts. But the scariest indicator is oil. The 12-month oil rate of change reached 92%. This indicator shows the percentage change in price over a year. Historically, every time it broke 100%, the greatest crashes followed. 1987, the dot-com crash, the 2008 crisis. We are one step away from the abyss. And what is Bitcoin doing? It is dying from the inside. Bitcoin network fees crashed to the lowest level in the last 14 years, down to 2011 values. This means there is simply no real organic demand for the blockchain. The market is held up purely by speculation. My strategy right now, I am in predator mode. I'm absorbing. My absolute priority is short. Judging by the heat map, the market maker can still test nerves and collect liquidity above. So I expect the global market dump closer to the end of April. I'm not trading Bitcoin manually right now. This dirt is collected by my trading bots, which work both long and short simultaneously, squeezing out passive profit. I personally continue to hold a global short on the stock market and am waiting for the new week to open. Tomorrow will be hot. Subscribe.